All right. Good morning, everybody. Let's start with the fact that I do not take requests. That's right. I'll play whatever the hell I want when I want, especially when I'm on the island and I've been awake for many, many hours. By this time, the caffeine is actually, we're going downhill. You get far more sarcastic Don. Can you imagine that? Far more sarcastic Don when I'm on island time. And I am on island time right now. Island time is, we're actually an hour past Eastern. So I'm in Atlantic time because I'm in the middle of the Atlantic right now. S&Ps this morning, you have just about 2 minutes to go to the cash open here. It's Thursday morning. We are post-Fed. Overnight volatility definitely hit this marketplace. Holy crap, we actually traded down to 68.17, but there's a bid back under us. I wouldn't trust this bid as far as you can throw it. Look, coming in to today's cash open, with all due respect, okay, be open to some pretty wicked two-sided trade today. That's very evident. There's something interesting here. Yesterday, when we kind of clocked out yesterday, there was a $39 expected move. There's still a $33 expected move, which is the marketplace right now is feeling a little uncertain. It's uncertain about itself. And the overnight trade, here is the first time I've said this in a while. We definitely got it done overnight trade. 260,000 contracts. The roll is going to be underway. The roll is going to be underway. So after today, I can't read volume for a full week. I'll talk about that more after the cash open, but literally, I cannot read volume after today because we're in the midst of the roll, and that is rolling from Dece to March. So put your helmets on, people. Before this cash open, again, there's a lot of, I think, assumptions. The bonds are actually trading a little bit higher. Speaking of the bonds, absolutely massive volume in the bond market. Okay, massive by massive. So you're doing almost 200,000 contracts, the damn bonds. Check out the notes here this morning. The notes, the ZN clear up to just shy of what, 750,000 contracts. Everything else kind of pales in comparison. And that's why I'm telling you right now, I don't know if they're buying bonds because they actually believe rates are going to lower, or they're buying bonds because they saw the move overnight. It scared the living crap out of them. There was heavy volume trading at those lows. Again, I want to reiterate this. There was heavy volume trading at the lows last night. When you're doing almost 3,000 contracts overnight, it's getting it done. Doesn't matter what you think about advanced decline line in the open. It's not really going to matter the ticks. The pressure, if it's coming, is going to come from AI stocks. Pressure, if it's coming, is coming from AI and AI related stocks. So interestingly enough, there looks like a technology. Yeah, there were some order imbalances there. Technology did not release a bunch of stocks right at the cash open here. And some big order imbalances. You can already see Nvidia down some 2%. And I can't really reiterate this enough today. Don't come in here with a chip on your shoulder, okay? For me, like, I look at this and the first thing that I think is like, okay, there's going to be two-sided trade. There's no question about that. But the path to the downside has already been paved in overnight trade because we did some serious contract size out there. You're doing 250,000 contracts. That's actually a decent overnight trade. So with that being said, don't look at volatility and think, volatility is kind of not, it doesn't matter what volatility did. Volatility already spiked. So anybody that needed their hedges already got that crap on. That's why I say the path to the dark side is actually a relatively easy one in trade this morning. Advanced decline line, okay? I know, I said to you, it doesn't matter. And I wanted to bring it up because why doesn't it matter, Don? Okay, because you can have 90 stocks trading to the upside. And the fact of the matter is, you've got Nvidia down. The players in the game, okay, are predominantly red this morning. Players in the game, especially Broadcom, that's going to put some real pressure to the marketplace. And I don't know how far this is going to extend, but I'm going to tell you this again and again. Okay, you could see this before the cash open, is that we traded heavy contract size, but no one really played their hand. That's going on right now. Microsoft got pummeled, okay, in trade. It got pummeled overnight too. Look in the overnight trade. I think traded all the way down to 470. If you bring up 470 on your screen over here, okay, these are big boy moves overnight. Now Microsoft has a bid back under it. Meanwhile, if they're buying Microsoft, I don't know, what are we going to do? Maybe sell some Apple, okay? Clearly, we're still selling some Nvidia. Speaking of Nvidia, I don't know if this is a critical threshold, critical price. I would think 170 is probably more like it. Okay. But we're halfway home to some real selling inside of Nvidia, which has not participated. So it's an interesting market. And you have markets basically at all-time highs, an all-time high. And you could also probably make an argument. Okay, there's your double top. Okay, it's a double top. That is one ugly smiley face in there. But you could argue that we're very close to a double top today. It's pretty important. I mean, look, this marketplace has shrugged off anything and everything. I think it's going to be a fairly long trading session. What I mean by that is the move that'll ultimately play out, okay, may not necessarily be seen until, considerably later in the trading session. As I, have said 3-4 times already, there's going to be a lot of two-sided trade out of this. And so why the two-sided trade? Again, uncertainty in the AI side of things, clearly Oracle, okay? Oracle got hit and hit pretty hard. I'm going to bring that up right now. I'll talk about this more in detail, but I did not trade any butterflies last night. I didn't like the volatility off the Fed announcement. And I'll also explain that. The vol from the Fed announcement was, it didn't play out with enough volume. And I figured to myself, I'm just not going to engage in a trade that didn't have any size behind it yesterday. Oracle was all over the place as well before the announcement. Oracle, though, was positioned to move about $23. Its expected move would have taken it to 200. Okay. It's not a 2 sigma move, but it's definitely a deviation and a half. There's still a chance Oracle rips back to 200. You're saying there's a chance. There is a chance it rips back to 200. And this is also, it's one of the reasons I'm very standoffish on the marketplace this morning. I want to make sure, okay, that I've got hands off the wheel and just let things kind of play out before I try to make any decisive moves or try to trade into this to any extent. I'm actually relatively surprised to see Walmart up this morning too. I don't care if it's even up 13 cents. This thing hit 110 in the overnight session. It's 113. They moved to the NASDAQ and holy crap, it's trading like a tech stock right now. Okay. I don't think you guys understand how big of a move to 110 is. Look on that chart. That's a holy crap move. Okay. Look at that. And it traded down here. You can tell, there's no volume down there. Really? Because there's volume down there. I mean, this thing traded overnight, okay, in a massive, massive range. And I know it's thin liquidity, and I don't give a crap about that, okay? Something is clearly going on with movement here when crap like Walmart, which is, it's off the rails kind of volatility to think that it traded. And again, you look at like a 110, okay, there's no recent sessions that are moving anywhere to that extent. So because of the overnight ranges on these underlyings, as I said to you, like the way that institutional and market making and what we call dealer gamma kind of works, dealer gamma works, okay, heavily off of these ranges, especially when we've traded in them, okay. It literally paves the way, okay, for moves on an intraday basis. So the stock's already been paved all the way down to 110. Anybody that needed a hedge, okay, they know what that's going to look like. And that's one of the reasons that you're not going to see this huge bid to the VIX. The VIX already actually felt volatility, I should say, felt the risk, okay, to some degree in overnight trade. You had vol all the way up. This is the VX futures, and this is not a great indication, but VX futures were all the way up at 1740, which they backed off, which they should, right? We rallied back a little bit. But again, the risk, the big scary portion of it was already seen. So now you're just kind of left to your own devices. And again, advanced decline line, that's not going to help you. Not at all. Meanwhile, in kind of a split session of trade, take a look at the Russell. They like me. They really, really like me. So the Russell is on a tear. Let's go look at its ticks. Okay. Russell ticks are also kind of leading the pack over here. But there's dissension in some of these ticks. The NASDAQ tick is effectively down, okay, up until a couple of moments ago. So it's a really, really mixed bag this morning. What this is an indication of, okay, is if you look at the Russell as maybe a better indicator of the entire economy, because it's not, all Google or all Microsoft or Nvidia, right? If you look at the Russell, Okay. Right now, the Russell is cheering, if you will, interest rate cuts. Okay. It's saying, well, the economy probably needed this, needed some of the rate cuts. Okay. Great. Meanwhile, the S&Ps and the NASDAQ are down. Okay. Not because it's something economic. It's just purely the big tech stocks. Tech stocks, just as of late, can't get out of their own way. Looking at daily charts, Nvidia, okay, nowhere near its recent high. Okay. Meta, well, kind of getting its clock cleaned. On the other side of it, we do have, of course, Google. Okay. Google is still riding high off of the Buffett investment. Microsoft, and again, look at this on a year-to-date basis. Microsoft's only up 14% on a year-to-date basis, where the spiders are up 17%. Okay. Apple, okay. Apple is up 14%. Spiders are up 17%. Amazon, okay, is up 5%. Microsoft, again, 14%. Google, it's a performer. It's almost 70%. Okay. Then we have Meta underperforming S&Ps. Nvidia up 30%. I mean, this was, remember, just a few weeks ago, it was up 50%, now up 30%. And of course, last but not least, Tesla in that pack, basically performing with the S&Ps. So what do you really have standing between us and the abyss? It's Google, and still Nvidia is there. That's the only thing that's really holding markets up. And when I say the only thing, okay, let's not, discount the fact that you're talking about a $4.3 trillion company, and Google, which is basically a $4 trillion company. Add them up, what do you got? $8 trillion of market cap that continues to actually hold onto the entire S&P. So when you think of the spiders and you think of diversification, okay, how diversified you feeling now there, big guy? Huh? Okay, you shouldn't, okay, because you have, and it's, I've said this before in my career, but it's never been more relative than right now. You actually have single stock risk, okay, in owning the spiders, which goes against everything that we've ever learned about, diversification, mutual funds, classical finances, out the window at this point. Okay. It's wild to see this. And again, I don't give a damn what you think about the S&Ps right now, because the fact of the matter is the ticks, okay, will be as positive as you want to be. The order flow, it's really hard for the marketplace to stage a rally when you've actually got Nvidia. This thing is being offered almost 3% lower today. It is what it is. There's no other really big moves. I think Tesla's 1.5%. Okay. Tesla's kind of an afterthought, though. In terms of its market cap, what are we, 1.4 trillion in here now? Okay. What's 1.4 trillion amongst friends? It is about 1.4 trillion. There you go. Almost 1.5 trillion. I missed a billion. Okay. I missed a billion here or there. I missed 100 billion. Okay. Yeah, like what somebody just said, the real bubble is ETFs. Okay. That's passive investing, okay, is at critical risk. Passive investing is, there's never been more people doing less with their money. There's a lot of traders. There's more traders than ever have been, like, there historically speaking, but there's also more passive capital, okay, on a magnitude that nobody's really sure, like exactly how large. I mean, they do know exactly how much capital, but how much is really decisively passive investment versus a little bit more actively trading? Those numbers, but we know it's, a magnitude of like 10x greater than it's ever been before of people that are invested in mutual funds. And how do you know that? You just base it on where the S&Ps are effectively trading, and it's a big move. It's definitely a big move. And again, year to date, up 17%. If the year ended right now, we are close to that year end. Okay, you'd be like, oh, it was a spectacular year. Okay, again, there's a lot of big grapefruits still hanging out there for this marketplace. Nevertheless, okay, as bullish as you want to be for today, as bullish as you want to be in the S&Ps, okay, how can you? You're now down 3% in Nvidia. This is going to put constant pressure to the NASDAQ, okay, and it's definitely going to pull that marketplace down, that marketplace being the S&Ps. Meanwhile, on the other side of it, the Dow, okay? Let's cruise over here, not to advanced decline line. I don't give a damn about the advanced decline line. What I actually want to show you over here is quotes, okay? And I actually have the Dow Jones brought up over here. We're going to actually look at the net change. It's Goldman Sachs, okay, Visa, that are actually leading the pack in here. And when I say Goldman Sachs and Visa, the way that the Dow works, the Dow uses a Dow divisor. So it doesn't matter about market capitalization. The Dow uses a formula based on net change, like each like dollar a stock moves, okay, equals X amount of points. So if I told you something moved 10 points, okay, a 10-point move, let's say, is equivalent to 80 Dow points. It kind of works that way. And that Dow divisor like changes a little bit, but $1 move, and it's kind of a stupid way of calculating it, because that means then the biggest stock, which is of course Goldman Sachs, okay, means the most in here. Goldman Sachs is up about 1%, which pales in comparison to a 3% move in Visa. But Visa right now means more to the Dow than Goldman. Okay, well, they're about neck and neck right now. Hopefully that makes a degree of sense. It's pretty wild looking at that. And then of course American Express in here. I haven't looked at this in a while, so let's go look at American Express. We can look at that. Okay, continues to kind of promote itself a little bit higher. Speaking of American Express, like this is not, I mean, it's not a bad setup for like an in out, okay? But you cracked the expected move, you hit it, reverted back down. You didn't leave outside and you're outside again. You have some cracks of lower expected move in here. Okay. It's a setup, but it's not like the best I've seen. And right now, okay, sure as hell better be the best I've seen, because I don't want to engage markets until we actually break, okay, this kind of extreme move that we've seen over here, extreme on the fact that we can't get out of our own way. Okay, what you're looking at is obviously today is Thursday. By the way, maybe that's not obvious to some of you, but today is in fact Thursday. You take a look down below, it's Thursday. And we jumped into this range the previous Wednesday. So you've got a hell of a lot of trading sessions in the exact same range, and not just the exact same range, but you're not even moving 100 points in here. I mean, your bottom is, let's say, 68.20. The top of it is 6,900. Okay, there's nothing really outside of it. It's an 80 handle range, and yet, okay, and yet, the reason I would caution you here on both sides of trade is that, including overnight, that's the kind of range that we've almost had. I mean, look where we went. Last night we actually closed, okay, right below the 6,900, traded all the way to 68.17 and bounced off of it. Okay, we're still stuck in the middle with you. Okay, again, today is a pretty meaningful day for markets. Can you break above 6,900? Or are we just going to break back down and go right for 6,800? And I would leave both sides of that trade, open in your head. Speaking of opening, the line in the middle of your screen, okay, let's actually come to it, because, everybody's talking about some post-Fed volatility. I see the post-Fed volatility, but net, where are we on the week? Bam, absolutely unchanged. If the market literally closed right here, right now, okay, that line in the center of your screen is literally where the week started. It's where last week to last Friday, that was when the bell went off. We're trading 68.70. Where are we trading right now? 68.70. Okay. So there is still a hell of a lot more movement to play out. And this is one of the times where, I spent a moment this morning going over like this expected move up here. Oh, it's $31. Quite frankly, this is like one of the brief times, okay? And I would just look at the $100 move and say, we're going to move $100. Okay, we're going to move $100. So helmets on. We're going to move $100 between today and tomorrow. I think we're going to move $100. I'm not joking when I say I'd be surprised if we didn't hit the upper or lower edge of an expected move. Okay, so again, it's definitely going to be on. There's not a great risk reward in anything, but I'll let Microsoft play out a little bit here. Could be a possibility of a short there. Meta is coming back on strong, and Meta, okay, is it enough to actually hold the NASDAQ together? Every ounce of Meta being bought, okay, is selling in Google right now. I can see the rotation. Okay, you didn't see that one, did you? Did you? So you've actually got Meta on the bid, and on the same exact second, I see Google being offered a little bit lower. Microsoft, okay, on the bid a little bit, but meager in comparison to some of the moves that you're seeing elsewhere. You're also seeing Apple, okay, which hasn't had much of a green candle on the 1 minute this morning, period. Okay, put that out to a 5 minute, and it is downright ugly. Taking a quick glance also down on your screen here, Let's look at the order flow in here. Nothing too decisive. Apple is not necessarily seeing put buying. They're definitely seeing some call selling in there. I'm really curious about Nvidia and Nvidia's order flow. Nvidia is definitely seeing some put buying going on. There's call selling, but there's definitely put buying going on. So you're caught up a little bit in some negative gamma squeeze. This is actually going to continue to pressure. Okay. The question that is going to hold relative throughout the course of the day is the pressure in Nvidia and Google enough to cave the entire marketplace. Okay. So at some point today, as the advanced decline line starts to climb and climb and climb, okay, these stocks actually have the capacity to pull it back with market cap. So if you see any further selling in Google, you see some further selling inside of Nvidia, Broadcom, okay, this is really serious implications on an intraday basis to price action to the S&Ps. Okay, it's not just going to pull the S&Ps down. You're missing the point. It's going to pull the entire advanced decline line under. Okay, you're not going to go off quietly into the night. Okay, but the S&Ps, they may have to be down 40, 45 points to see the entire marketplace start to throw the towel in. Right now, okay, it is a rotation. Okay, it continues to be rotations. As I said to you, like Walmart totally baffled me. Walmart might be a good trade on an intraday basis because this thing is actually struggling. But if I'm going to trade something like Walmart intraday, I have positions in here, but if I'm going to trade Walmart intraday, okay, I'm just going to sell the stock. So I just shorted some stock in there. If you are so inclined as to want to trade Walmart on an intraday basis with limited risk, but you don't have the capital to go after the stock, or you just can't short stock in your account, don't screw around. Just come in here, okay? These are fairly tight markets. Use like a 60 delta option. It's not that much risk. Use a 60 delta option, go after it, okay? So I'm going to cancel replace in here. Again, I don't have, okay, I'm going to show you the edge. I don't have an edge to say like, oh, I think the market's going to do this, okay? What I have here, though, is a nice edge in the trade itself. So I just bought a put, shorted some stocks. By the way, that's the same trade twice. I'm just showing you how to do the exact same trade twice, okay? And the reason I'm doing that is I want you guys comfortable with, like how do you go out, okay, and trade if you don't necessarily want to short stock. I'm fighting with this damn market. 127. Okay. I am the 127 bid. I am one lot. Captain one lot. Anyway, I'm 127 bidding here. So I'm just buying the 114 puts. This was a trade, though, that I would exit by today. Okay. You're like, why Walmart? Why not? Okay. I saw what it did overnight. And I have a feeling that if the marketplace starts to kind of roll over here a little bit more, here we go. As I said, they got to be down like 40, 45, and you'll start to cave this advanced decline line. But I would think that stocks like Walmart will actually be along for the ride. And you were like, it's freaking Walmart, man. It's only going to move like $1 or $2. You have to recognize $1 or $2. Okay. Let's highlight. Swing and a miss. Let's highlight. Hold on. I'm going to get this thing highlighted properly. Okay. Let's highlight the options. I traded this option. It could either be worth this or this. Does that make sense to people? Okay. This is a strike price shift increment. And it's something that they teach, okay, in like market making 101. They teach you, okay, to look around where you're trading. So if I paid $1.37, if the stock were to move up $1 or down $1, if it moves up $1, this is worth this. So my $1.37 would be worth like 81 cents. If the stock moves down $1, my $1.37 will be worth like, let's say 220. Okay. That's a hell of a good risk reward. Because on one side of it, what do you have in risk here? Let's just round this $1.40, 80 cents. Okay. So what are you going to lose over here? You'll lose 40 cents if you're wrong. What do you make if you're right? Okay. You make 60, 70, you make 80 cents if you're right. Why wouldn't you do that trade? Okay. By the way, I apologize. That's 60 cents. 60 cents. Okay. Why wouldn't you do that trade? Even in a 50-50 world, you're risking 60 cents to be able to make 80 cents. Okay. Not bad. Not half bad. Be mindful, okay, of that today. And we'll see how Walmart actually moves a little bit. Seems like, people are like, oh, why? I don't give a crap what I trade. If I can make, okay, this is only for a $1 move, and a stock can easily move $1. But on a percentage basis, okay, it's not always about percentage basis. I'm looking for layups in here, okay? If the marketplace moves, maybe like I think it's going to move, Okay. The engagement might not be for me to be in tech. I don't want to be in the epicenter of crappy risk. I want to be in crap, okay, that's going to move because the marketplace gets pulled down. That's the idea over here. I want to be in crap that's going to move if the market continues down. Now, okay, that was a rough ride to the downside. I warned you guys there's going to be a lot of two-sided trade. And if it comes, look at this, almost 10,000 contracts a minute. If it comes, it's going to come at you fast. Okay, it's going to continue to come at you fast throughout the course of the day. But as I said to you, I really think that the day has to kind of evolve. Like, I don't think this is going to be off into the sunset kind of a day. Okay, I think this is going to be a hard-fought trading session where all of a sudden, okay, everybody better wake the hell up because you've actually been in an incredibly tight range for a lot of days. Okay, look, I'm bringing it up again because I want to show you, right? You think that's a standout? There's a standout yesterday. It's a standout today. Where are we? Okay, right back here. We're only what? We're almost dead center between that 6,900, okay, and breaking through. I think you really start to break through at 68, but at 6,800, like 6,820 is interesting, but 6,800 and you're through it and you're out of the range. All right. Again, very, very hard fought day. We're right in the middle of the range. Okay, you couldn't be any more dead centered in the range that we've seen of trade over the last almost, 8 to 10 sessions in here. Okay, you're dead center in the range. That will not be the case by later today. So this is where I said the S&Ps have to be down about 45. This is where I would think that you'll start to break the advanced decline line. Okay, or it'll start to pull it under, and it is. It's 65 trading to the upside. Okay, slowly starts to actually drag stocks. I always think of, like, in my mind, like it's like you're trying to climb up a slide and you're getting pulled back. Okay, what are you getting pulled back by? Crap like Nvidia. Okay, doesn't mean Nvidia is just going to be selling off all day. They'll start to rotate to other places, but they're going to jump in and they're going to start to rotate and sell other things, like maybe Apple. Okay, oh, how exciting! What's Oracle looking like again? This thing kind of play out? Yeah. So I was not discounting the ability for Oracle to get even back to 200. I was actually contemplating even pulling on a bullish trade, but I wasn't going to trade into that. As of what a crap fest in the first 3 minutes. Okay, SPOOs are down 50 handles, and away we go. All right. So you'll note, by the way, if you're into ticks, okay. Oh, seriously? It's raining again? What the hell is wrong with this island? It's like pouring rain. It was beautiful this morning. Okay. I didn't even go to the gym this morning. I just sat outside. I had some coffee. It's absolutely beautiful. I haven't gotten, like, every day here it rains. It may only rain for like 20 minutes, but it'll rain like a half an inch in 20 minutes. It's quite impressive. But then the rest of the day, okay, it's humid. It's very humid. Stan, man, I've been in the desert. Okay. I'm like the water, I'm shrinking. It's horrible. Okay. Let's go look. So Walmart has moved a whole whopping like 15, 16 cents since we put that on there. Let me knock that one off. Okay. I don't like to leave a resting order in the book. Let's go look at some of the individual trades. I'm only on this morning for another few minutes before I have to bring on Gianni. Okay. All right. I want to get to some really critical points. So for today, I'm just looking over here. Walmart's right back to where we want it. XHB. I want to go look at XHB briefly. Okay. How is this thing still up? How? Okay. It's reacting obviously to the bonds, but the day is young. Yeah, I'm a little perturbed. I'm a little bit perturbed. 8 days left. Okay. XHB is officially not looking good. Meanwhile, Hood, though, has come back. So, hey, I'll take the sacrificial lamb in XHB to pull Hood out. Okay. Hood is definitely getting hammered in here. Interesting. Very interesting. Okay. Hood negatively reacting, possibly lower rates. Okay. So let's continue on. I'm just looking. Caterpillar. Where's Caterpillar today? Cat down $8. Oh, come to me, Cat. By the way, if you guys don't remember the funky little trade I did, look where we are right now in my funky little trade. I'm going to zoom in. Okay. The whole idea of the trade was to hold it. Okay. Hold it till when? December 19th. When's December 19th? It's next Friday. Okay. Next Friday, if we're at 110, I'm going to make almost $3,000. I can make $3,000. Okay. from a 1x3 in here, but we're getting risky. It's risky out there. I like it. I gotta get out more often. I gave up the coffee and just went right to the Monster. To be fair, though, this Monster, this is disgusting. It was left over from yesterday. I just figured out what the hell I'm going for it. I'm gonna let Gianni in, but I'm gonna keep going for like another 10 minutes. I got crap I gotta talk about. Johnny probably heard that. He's like, oh boy, here we go. He has no idea what he's going to be entering into here. We have kind of a funky schedule today because I'm going to come back on with Tony Rago later. So Tony got something to show you later. I'm actually kind of excited about that. I'm going to stay on for another. I'm going to get it out. I've had enough caffeine this morning that I can't keep up, man. So I'm going to stay on with you for a couple of minutes in here, Gianni.
Cool. What's going on today?
That's all right with you. What's going on is, well, we were selling and then we're going to be buying and then we're going to be selling again as we go round and round. It's a hard fought day of rotations in here. And it's funny because the things that matter in the marketplace are basically stocks that are on my screen, but the advanced decline line is not a great representation right now of some of the price action in the overall marketplace, which is prognosis negative. Like, look at the Russell. Check out the ticks this morning. Some violence in there. And by the way, I want to make something very, very clear to everybody listening. I am not, over the edge and outright bearish, not this early in the day. Okay, you're going to get tortured here a little bit, and people are going to get caught up in this. I always say that volatility like this, goes flat for a while, but it systematically comes back. But this is the kind of vol that knows how to like dismantle a retail trader. Okay. I'm gonna rally back. Okay. This is not a rally back. This is what, all right, hedging looks like. This is dynamic hedging where you reverberate back up and then they go for another round of selling. But this is not going to be an easy, dark path to the downside. But I also stated a moment ago, to see us actually trade to the lower edge of the expected move in the next 24 hours would not at all surprise me. Okay. It's 67.70. You're like, you're out of your mind, man. That's far away. Okay. It doesn't really matter what we think. It's whatever the gamma risk and how quickly this market turns. Evidently, the marketplace sees some risk right now because the volatility futures moved up. Now, I want to cover a couple things before I let you guys go. Funky cat spread. Oh, Disney did a deal with OpenAI. Okay. If you guys missed the deal that Disney did, it is trading a little bit higher right now. I think this thing will probably slip a little bit back. Here's the deal, Here's the deal. Disney invested $1 billion, in OpenAI. What does an OpenAI get out of it, Well, they don't just get the $1 billion. They also get, the use of Disney characters, which includes Star Wars, Minnie Mouse, whatever. All of the major Disney production characters are included in the deal. There's a licensing agreement for 3 years where Sora, which is OpenAI's like video crap and pictures, for those of you who have no idea what Sora is, you can create videos and stuff on there. Sora will have access to all the Disney characters. I, for one, am going to take Jabba the Hutt and I'm going to put Minnie Mouse in the bikini and chain Minnie Mouse to Jabba the Hutt. You know exactly what I'm talking about, don't you?
Yeah.
Apparently, I'm the only one disturbed enough to mention that early on in the day, but definitely came to mind.
Yeah, I've only had one cup of coffee, Don. Come on.
It's not gonna let me do it, man. Okay. I mean, that's better than Leia. Come on.
Yeah.
Probably not better than Leia, but for those of you that don't know that, it was Return of the Jedi. Okay. They chained, literal chain, because that's how she killed Jabba the Hutt, by choking him with the chain. So I was thinking of just putting Minnie Mouse in there. That is not out of bounds, That is not even like X-rated at all. It happened, people. It was in Return of the Jedi. I was young.
Those were all PG-13, weren't they? I think all the Star Wars.
No, man, they were PG. There was no PG-13 back then. Oh yeah, you weren't even alive back then. There was no.
No. I mean, the only ones. It was the first one with Darth Maul. What's that one called?
That's not the first one. That's the crappy one.
Well,
Yeah,
no, and technically, no, it's not the first one, but it's the first one that was
yeah.
made while I was alive.
You mean
The first three, the original three.
the stupid ones that started to ruin it, and then like Disney got a hold of it, and they're like,
Yeah,
once the word monetize came in there, and I'm like, I'm out. You
yeah.
know,
No, there's only six Star Wars. So,
to me, there's really only three.
well, yeah. I mean,
There's
that's
really
fine.
only three. I mean, it's and then by the way, they're going to re-release them, I believe, this next year because it's the 50-year anniversary of it.
Wow.
So, and by the way, they literally they didn't have PG-13. I mean, I can probably chat GPT this, but they didn't have PG-13. Maybe the late 80s, 90s. Okay, there was no PG-13. So, you grew up, in the 80s, because I was born 76. 76, baby! You know what that means.
You're almost as old as Star Wars?
I am as old as Star Wars, but it's the 50th birthday is coming up in March. Okay, there's gonna be crazy things going on. I'm really really not. I just went to my buddy's 50th birthday party in Vegas this past weekend. It was like 10:30. People are at the dinner table yawning, and I'm like, okay, it's been a night. Get your walker and let's go. Um, yeah, it's awesome. Okay. Graduated high school in 76. Okay. There's like my dad says, I got underwear older than you. And I'm like, not anymore. You can't say that anymore. That's just disgusting. Okay. But there was no PG-13. You basically grew up in an R-rated environment if you grew up in the 1980s because there was only like a couple of channels on TV and you watched whatever the hell they did.
Yeah.
That and I remember going to the drive-in when I was a kid and they always had like a PG movie. And then they had another movie after that that was usually like R-rated, and the kids are supposed to sleep in the back of the station wagon. Okay. But I always watched that crap. Okay. I think I saw Porky's at the drive-in theater when I was probably about
Oh,
seven.
that's a funny movie. I like that one.
Yeah. Yeah, but it was, and actually I know I was about seven. Yeah, it's good stuff. Yeah, my dad is actually 1940. Yeah, my dad's 1942. I had to think about that for a second. So it's awesome. Okay. That is awesome. All right. So what was I saying? All right. Disney and OpenAI. So now you can, I mean, it's a monumental deal now where you can make, Minnie and Mickey do anything you want. It really is going to get disturbing out there if it wasn't already. Back month volatility futures. I got a great question the other day and I want to bring it to your attention and everybody's attention before I, hop off here. And that is, I mentioned in last night's video, the back month vol futures remain consistently and stubbornly high. And I got a question from a client, and then I was talking to a buddy of mine last night that trades volatility. And we have a pretty damn good reason as to why the volatility futures are higher and they're going to remain higher, and that you should be on your game right now. And if you take a look at the VVIX, okay, we're basically at an all-time high in markets with a VVIX that's actually considerably higher. Okay. Why? Who here knows why? Because I have I would put a 90% probability on why.
You want me to try and answer that? You want the audience?
I don't know. Let's see if they answer it. You're welcome to take a shot too. Okay. Why is the volatility in these back months considerably higher? Okay. Because I'm going to tell you, it is interesting. Even this contract with 6 days left, okay, even with 6 days left, there's quite the divergence between the volatility futures and VIX. Those two have to collapse on one another. Okay, political instability is one of them. Okay, tax harvesting. Okay, I'm going to give you the real reason that we have. Okay, Supreme Court briefing argument schedule suggests decision by the end of 2025, a very early 2026. The most likely window is between right now and late December. Okay, remember the original tariff arguments were heard, I believe it was November 5th. The opinions, okay, from a Supreme Court usually drop on Mondays. It's tariffs. Okay, I mean, I would put 85-90 delta on that being the reason that volatility remains relatively high. I think you have to be a little bit cautious being long because of this. And this could go either way. Look, even if the tariffs are struck down, they're going to find another way to put the tariffs on. Okay. Overall, there's some significant market risk, though, on this particular front. And that significant market risk it does impact even some of the tech stocks in here. So it's going to get interesting. By the way, it would be really interesting to see them release like, this coming Monday because it's like expiration week and it's triple witching. But if they could even release it the Monday of like, December 22nd, right before Christmas, because they assume people are going to be, kind of hiding away a little bit. I'm not sure what this is going to be either. Like, they're going to strike it down, maybe not. Okay. Or they're going to let them run wild with tariffs. Okay. I don't have any skin in the game either way. Really, I'm not going to give you, thoughts on it. It doesn't matter. Okay. But I think that that's definitely going to hold volatility consistently higher, and you got to be on your game at all times. The SPX, okay, last thing I'll mention, and then I'll turn it over to you. But the SPX, does it see the volatility? Okay. And the answer is kind of. I mean, look, even into the Christmas season, the volatility is still, it's decent. Okay. I mean, you can see they're discounting for some of there's a trading week that has like 3.5 trading days in here, into December, 25th, obviously Christmas Day. There's a half a trading session in here. The volatilities though, okay, they are somewhat elevated in the front. So, and you go, well, how do you know that? Okay. Cause like these volatilities right here are even below this volatility here. See that? Okay, kind of wild, right? Like the market looks like it's starting to price in a change in here. So we'll see how this is actually going to play out. Anyway, stay on your game today. The Walmart position, I'll just be in it to the end of the day. It was working, now it's not working. Okay, I'll be in it to the end of the day or near it. I'll let you guys know if anything changes in that particular front. I am definitely shopping some spreads today, but I'm gonna let the market kind of show its hand. I'm here all day long. I'm gonna be back on, okay, at 1 Eastern with Tony Rago. 1 Eastern, Tony Rago. That's 10 a.m. Pacific. Gianni, I'm gonna turn it over to you, man. I do thank you for actually having me on here, eating up like 10 minutes of your time. But I'm not going anywhere. If I gotta be here all day, I might as well. I'm gonna talk to my screen, by the way, even after I hop off over here. Say
But
whisper
you
some.
just reminded me of in that Sora thing. I'm going to use what you just said, like for the Wolf of Wall Street. I'm not leaving. I'm not leaving.
Going anywhere.
Yeah,
You're gonna have Mickey Mouse say that.
yeah. I'm not leaving.
It's all yours, man. Have a
All
good
right,
second.
cool. Thanks, man. All right, Theo traders, we are live. Good morning to you. I'm a little bit earlier in the day than I normally am, filling in for Professor Bierman, who's going to be coming on after me. So welcome, everybody. Hope you are doing well. It is about 10 after 10 Eastern time here in the chilly state of Michigan. We did have a bit of a thaw come through around my parts yesterday, melted some of the snow, which is nice. Gonna freeze up again early part of next week, and then we warm up, and hopefully my deck can get finished. So I can, like I told you, it bothers me when I'm a little bit behind on putting stuff away outside, but the guys weren't able to clean up their mess before everything started snowing on us and getting cold. But we are in the day after Fed Day, and as I always say, the day after Fed Day is more important than the Fed Day itself. And you're seeing a sell-off today, largely in tech-related names, but let's not lose sight of the fact that the tech sector registered a record, one of the longest winning streaks in history, looking at XLK. I believe it was 13 days up in a row. So pretty remarkable. So a one-day pullback is really not that surprising. That being said, we're seeing more and more strength come from financials. So we're going to talk about that and what this rotation means. The Russell 2000 hit a new all-time high yesterday. That's really important. That's really important because the Russell 2000, no matter how you slice it, is nowhere near in bubble territory, as you could try and argue for some of the stock indices, the large cap stock indices here in the US. So I'm looking for that to be a big theme in 2026. Rotation into the small cap sector. And I think it's going to be home to a lot of opportunities. The three biggest sectors in the Russell 2000, the small cap index, include financials, industrials, and healthcare. We've been doing very well with healthcare over the last few weeks here. But then last week, tech stormed back into the forefront. let's see where it finishes this week. It was doing good, so we'll get a little bit of a preview as to how we may finish out the week today. I'm going to review with you why volatility is the price that we pay to trade, because without volatility, there's really no chance of getting one of those arbitrage opportunities. Show you some data why I like to buy high. Yesterday we talked about why I like to buy at the close. Well, I like to buy high at the close. That is my bread and butter setup. It's all about stacking the odds in my favor as much as I can. So we also are seeing bullish optimism grow. So, a little bit of a pullback today, not all that surprising. There's more bulls now than there have been in recent months. But that's okay because we need that to happen if we're going to see a high of significance form in stocks. And I am looking for an important high to come into the market. My preferred timing is sometime in late January. Obviously, what I want, what the market's going to do, has little to no bearing on one another. But we're still early in this new cycle, guys. We're seeing leadership come from the right sectors. I think we'll finish the week on a strong note tomorrow. But today, we're going to be doing garbage day a little bit early, and here's why. I'm not going to be around tomorrow in the main room. I'll be popping in and out of the Trinity Trade chat room, but I got some things going on that I need to take care of before we get into the full swing of the holiday season. So I'm not going to be around tomorrow, which means we'll do the garbage day updates today to make sure you have your stop losses all in the right place so that you can ride the volatility storm if anything comes around. So in just looking at the Trinity terminal today, you are seeing the tech sector dominate, outperforming. Healthcare actually pulling back rather hard today in terms of the names showing up in the terminal. So I can't say I'm all that disappointed in seeing technology as the top performer. That usually means good things to come. So again, a little bit of choppiness in the market right now on the day after Fed Day, but I'm not really too concerned. I don't think it changes the big picture at all. So let me go ahead and switch over to Think or Swim if my Zoom is going to cooperate here. It finally has. All right, who do we have all in the house today? We have Jackie J, John J, Randy, P Butts, Roger Bro, minus 34 in Fairbanks. Man, that's crazy. How's it hanging, Rosario? I really can't complain. Kids were up, here and there last night. I actually went to bed rather early, but you know how it is. 3 a.m. and then 5 a.m. and my son, we transitioned him out of a crib into a toddler bed. I guess it would have been a couple months ago. And so now we're trying to, work with him and say, listen, bud, like you can't get out of your bed and, just come visit us whenever you want when it's bedtime. He'll even do that like when it's nap time, and he'll, go start screaming down from the top of the stairs. And the problem is that my daughter's room is right next to his room. And so when he starts screaming, there's a tendency to wake up my daughter. And you know how it goes with toddlers if you got kids, guys. So yeah, it's like you have to like reteach them how to sleep in a different type of bed. No, he still sleeps, but he's in typical toddler fashion, taking advantage of his newfound freedom and liberty and power to get up and move a bit more freely. But the other thing too is, you put him back in the crib, he's going to start climbing over. And if he falls out of that, it's probably worse than him getting up in the middle of the night. So anyways, Trader Tom, Tony D, Rodney G, Les, Carl, 4 degrees where you are. Wow. Ted, Robert. Yeah, small caps look good. Small caps look good. So I think we're positioned good for that. A little bit of volatility today, but not really too concerned just yet. LeBlanc, Frankie, bonjour, BD. Tim, Chicago Dave, Nurse Diesel, Calvin, PG, Nora, how you doing? Good to have you here. Steve G, INP Myers, Felix, how you doing? SHP. Let's see. Rio. Yeah, a lot of the tech names, I'm actually glad you made that observation. It's like the large cap tech, which is selling off today. But some of like the smaller and mid cap tech names are actually holding up all right. So I think That's a really important observation to make here. And one, I was, tuning into Don's session this morning, and I do think the big bubble is in passive investing. Guys, what's going to happen when you have the Mag 7 names do nothing for a few years at a time, and everyone's just passive investing, and all these ETFs own, predominantly Mag 7 stocks? It has never been more important to have the skills to select individual stocks. All you've heard over the last couple of decades is you can't time the market, just buy the S&P and buy the index and low cost dollar cost averaging. Yeah, guys, that's all like Vanguard propaganda. Okay, that's coming straight from Vanguard, coming straight from Fidelity, coming straight from BlackRock, coming straight from all those asset managers that want you to just park your money in their funds, never sell so they can keep collecting their fees. And, they just pretend like there's no conflict of interest at all. And yeah, the data does support being in the market over a long period of time. Okay. But the problem is that a lot of these indexes or a lot of these ETFs aren't automatically rebalancing into areas of the market where you're going to be able to take advantage of that rotation. So, yeah, again, I think that stocks picking skills are going to be increasingly important in the years to come, especially when the time comes that the Mag 7 is no longer where the party is happening. So thanks, Jackie J. Now letting me know that I'll have those issues until they're about 10. So Doug, Trader Vin, Fred, Mari. Okay, let's go ahead and take a look at what's going on in the markets today. Let me check the portfolio. I am down today. But we had a little bit of a washout at the open, and we're starting to come back some now. Some names definitely holding their own up today, including some positions in financials. Crypto selling off some, silver hitting a new all-time high. But again, all in all, I don't think the picture's really changed here. So taking a look here at the dollar yen. Interesting setup here. So you got that little bit of a pullback. You remember that a couple weeks ago, I was trying to get a long position here. Could I have another opportunity to do so here? That could be the case. But since I'm not going to be around tomorrow with you guys, I don't really want to put you on a futures trade if I'm not going to be back until Monday to check in on it with you. So, yeah, you could see, another low coming in here in the dollar. And I want you to think about this. If the Fed is only going to cut rates one more time next year, okay, that's I think the biggest shift, because even just a couple months ago, we were looking at the Fed, cutting rates 3 or 4 times next year. So what would have to happen for there to be more rate cuts? Well, I think there needs to be a hard market sell-off. I think commodity prices need to drop. And interestingly, I'm actually looking for something like that to unfold in the first quarter. That's what's kind of crazy. So I'm not ruling out the possibility of more rate cuts, more than one rate cut in 2026, but it's going to come with a price to pay. Nothing is free in life and especially in this business, guys. Meanwhile, you're seeing the euro catch a bid against the dollar, and yeah, it's accelerating here, guys. So I'm still not ruling out the dollar making a big comeback next year. And so, if the euro does make a slightly higher high here around like 120, maybe that's an area where we step back in and try and sell it. But this is actually pretty good price action here. I mean, this pathway for the euro, maybe it does hit 124. Okay, 124 would actually take out the high from 2021, but it wouldn't be above 2018. So this is a big moment for the euro, guys. We'll see. There's a lot of geopolitical chess pieces moving over in the Eurozone. And, we'll have to keep an eye on that, because the whole design of the euro is not very good, right? You have one currency for 25 different member states with 25 different fiscal budgets with 25 different countries, each trying to have their own national interests, put on the agenda. And that's just not how things work smoothly, So anyways, euro against the Japanese yen, kind of quiet today, but you take a look at bonds rebounding. So yesterday I said, look for a low in bonds and a rebound. Now, here's the thing. I think that this is actually going to be a rally that we're going to want to fade. We took out this low in bonds from late September. That's a really important one. And so I think we rally, maybe even form a high tomorrow or Monday, and then roll back over and start to drift lower into January. So um, yes, you take a look at this, and I don't think you're going to start to see a big move to the upside in bonds until after some volatility in the first quarter. So yesterday I talked about the yield curve quite a bit. And I'm not going to get into all those details again. I would encourage you to check the archives if you want to see that discussion on the yield curve. But basically, right now, the yield curve is steepening. Longer term yields are higher than shorter term yields. That is a healthy yield curve structure. Basically, it tells you that if you're tying your money up for longer periods of time, you're getting more bang for your buck, as you should. But when market volatility comes around and stocks sell off, there often is a flight to safety that unfolds. And that flight to safety predominantly goes into long-term treasuries. So if stocks sell off and everything's dropping and traders are buying up 30-year bonds and short-term interest rates are unchanged, think about what that does to the yield curve. It flattens it out. So short-term rates are unchanged, long-term rates come down. I'm not calling for an inverted yield curve in the slightest bit. Okay, when things really start to hit the fan, when you're about to go into a recession, you'll see long-term rates drop below short-term rates. But whenever you have market volatility, it typically corresponds and happens at the same time as a flattening yield curve. Okay, meaning that long-term rates are coming down more than short-term rates. So it's no coincidence that I'm looking for a low in bonds sometime in January. And a lot of times you start to see traders buying treasuries before stocks start to show real signs of risk. So everything is actually lining up for some real volatility. But in the meantime, because we are in a risk-on environment right now, okay, I actually wouldn't mind to see treasuries, especially long-term treasuries, drift lower after forming a high tomorrow or Monday into, the January timeframe, form that low, start to rally, and then things start to fall apart in the stock market. That's how I'm seeing bonds right now. Okay. And again, I do think that bonds will do well, at least for the majority of 2026. I would actually prefer to see bonds rally into a high of significance in in the second quarter, maybe even the third quarter. But the the big picture is that some more sideways action and a sideways downward oriented drift into January is preferred at this point. Okay, you can see here ZT, they cut the rates yesterday, got that bid there. Now the question is how, like I said, how much are they going to cut rates? You want rates to come down more. Listen, guys, Scott Bessent knows his stuff. This isn't, Janet Yellen. I say her name like that on purpose. Okay. Or Bernanke that never managed money. Bessent's the real deal, guys. I'm not saying you need to like or, be a fanboy of this administration at all, but like respect given where respect is due. The guy managed money for real. He was a big guy for Soros in the 90s. The guy understands how markets work. And he knows. Remember when we had the volatility earlier this year? How often we forget. How often we forget when the administration was saying, "Oh, we're not worried about stock market performance." Remember when everything was selling off in the first quarter? Okay, now we forget that because now it's like, "Oh, the administration only cares about Wall Street new all-time highs." Okay, fine, maybe, but you want more rate cuts next year? There's going to have to be a big sell-off in stocks. They're going to engineer it. They're going to engineer a pullback. So Dom was talking about tariffs. Maybe it is tariffs. Would tariffs being struck down be bullish or bearish? Seriously. If they say, hey, you can't collect all this taxes and they have to return all these billions of dollars back to businesses, might that actually be bullish? Could that correspond with a blow off top in stocks? I'm not ruling that out. But mark my words, guys, this administration is going to want to create some volatility in the first quarter of next year, similar to what we saw this year, in order to get the Fed to want to lower rates again. That's the only way it's going to happen. It's the only way it's going to happen. And they're also going to try and crush crude oil prices. I am a crude oil bear. I'm actually glad to see this selling off today. I was saying how like something wasn't right in the relationship between oil and bonds. This thing looks like it's about to break down big time. Okay. And so if you get crude oil crashing next year, if you get the Fed to lower rates, and if you get the stock market that goes into a blow off top here in the next month or two and drops, maybe you get a 10 to 15% correction in a short period of time. The Fed's going to move. Okay, oil prices will probably bottom out at that point. There will be a real restart in the economy. And that's kind of what has to happen because even though stocks are at all-time highs, the everyday American is not really that optimistic about the direction of the economy. Okay. Tim asks a good question. Where should rates be? Well, let me go ahead and pull up the Fed Fund futures here, and we can take a look at that real quick because that is a good question. Where do we think that they're going to settle on the rates? So let me see here. What do we got? So they're not going to move in January, right? We're at 3.5, 3.75, and it looks like the next cut is shaping up to be in April at this point. Okay, so that's not really that's 4 months away from now. I think, Tim, I think they're going to try and get it around 3 to 3.25. So that would only be really two more rate cuts. Maybe if they're lucky, they can get it back down to 2.75, 3%. But that's if they're lucky. That's if they're lucky. So yeah, and Peter said it should match inflation. So, inflation is around 3%, right? I think they're going to try and get it around 3%. And then they're probably going to try and have long-term rates, around 3.5%. Okay. So, you take a look at long-term bonds here. So you can take a look at TYX CGI and zoom out. How far can they get this down? This is what they want to do. So if they get this down to 3.5%, right, and you get short-term rates down to 3%, you still have that steepened yield curve, right? That might be what it takes. That might be what it takes. And then think about this. If inflation starts to creep back higher, but the economy is slowing down, you have some sort of stagflation. Maybe long-term rates aren't rising as fast as they should because they're pricing in lower economic growth. And then, the Fed is gonna maybe they try to raise inflation. But I'll tell you what, guys, if Trump puts in this new guy, Kevin Hessett, and he dares to raise rates, it's gonna be a